Yo, what's good? What's good? I'm testing a dice game quick. I just want to illustrate that a higher win rate's probably better, but I'm kind of testing it myself. So let's look at this. The game is if you standard dice. If you roll a 6, you lose, and you lose 5R. But if you roll 1 through 5, you win, and you collect 0.2R. And you might think, well, that's 0.2R, that's not going to work. Well, I'm pretty sure they're equal. We're going to make that certain right now. So 5R, which is 1 divided by 6, is 5R. And that gives you a 16.6% chance of winning, or in this case, losing. So I want the chance of winning to be 1 minus that, which would be 83%. A 0.2R is 1.2, 0.2 divided by 1.2 is equal to 0.667. So you do 1 minus that, whatever, is 83.3% chance. So they are inverse. A 5R is in. 0.2R is inverse of a 5R. They are equivalent, okay? And this is the right statistics because if you look at the dice, there's 6 possible sides. There's 1, 2, 3, 4, 5, and 6. Now, if 6 is a winner, in this case it'll be a loser, but whatever. If 6 is that's just one spot out of 1, 2, 3, 4, 5, 6, right? But all the rest, the greens, are winning. So that's 5 spots that it's possible to win, and then 1 spot that's possible to lose. That's 1 to 5 ratio. Okay, that's a 5R. A 6. If a 6 gets rolled, it's a 5R. Should be a 5R because it's 1. Risking 1 to make 5 spots. And that's how I came to it, and that is the mathematical correct way to do it. It's math. It's correct math. So let us take a roll, a gander. I'm gonna do, I don't know how much count, 19 of these. Let's roll it. I want to illustrate that we win most of the time, like way most of the time. Okay. I'm just looking for 6s. If a 6 is rolled, then I lose. But I just collect wins, bro. Collect wins. I mean, it's not even a concern for me. You know what I'm saying? It's so many wins. So in this case, look at this. If I'm trading, I'm up. You know, I'm up 1R for sure. And I try to take my risks and try to win, but I keep on losing. Oh, boom, I lose. Wow, huge trade there. 5R. Now I'm down 4R because we just rolled a 6. Oh my gosh, another 6. I can't believe it. Seriously? Are you serious? 3 6s in a row? What are the odds of that? What are the odds of that? That's insane. The odds of that is 0.166 times itself 3 times. And the odds of that is 0.45%. 0.5% chance of happening 3 times in a row. Now what is the percent chance? It's 4 times in a row. That's not how math works. That's not how probability works. All right. Once it's rolled, it's done and over with. This dice has no memory. And in trading, it has no memory either. So what it means is what's just occurred doesn't matter, even though we think it does. Well, what are the chances of 4 6s in a row? That's so unlikely. So I'm going to short that now. That is called gambler's fallacy. You're trapped in gambler's fallacy if you think that, oh, it's 3 6s in a row. The odds of a 4th one shouldn't work. It's gambler's fallacy. It came from a roulette table. It's gone red 38 times in a row. In Monte Carlo, there's some situation, I don't exactly know the number. There's some famous situation in, I think it was Monte Carlo, where it's like it was red all these times in a row, or black, I don't exactly know. But everybody started betting black the other way. Everybody started betting the other way because they think it's near impossible to continue going. It's a 50-50 chance. It's more of a 50-50 chance. Why? How can this possibly be this, reckless? And I still have hard times today understanding gambler's fallacy. How is this possible that, 4 sixes in a row will roll? No way. It's so unlikely. So very unlikely. So, yeah, it's just so unlikely. But the most people have a gambler's fallacy. It makes sense to us, but it shouldn't. It has no memory. Look, all of this has occurred. It has no memory. So let's roll it again. Let's see what happens. It's likely going to lose because it's a 16% chance, right? So that one lost. But it has no memory. Remember that. Has no history of memory. Trading does too. Another 6. Wow. I'm going to lose big time on this one. Wow. There's 4 6s in this 19 sample. That's too much to win. We'll see the sum at the end. This is not the exact example I wanted to show. Another 6 to finish it off. Wow, the sum's going to be so against. The sum is negative 22R. I don't think anybody can beat that score. That is crazy. 22R, are you serious? Holy smokes, man. That's 5 of 19 got 6s. 5 of 19 is 26%. You only have to win 16.6% a chance, remember? To be break even, you won 26%. That means it's highly huge edge. That makes sense why I'm down 22R. Okay. So that was a simulation of winning and losing, a high win rate versus a low win rate. And look at it. Look at this. That's the truth. That's the math. You might think 0.2R is undervalued. That's why you lose. I mean, it should go more than that, right? Wrong. That is the math. That's the math, dude. If you have a 5R, you only have to win more than 16.6% chance of winning. So that's your break-even rate. If you risk the same amount every time, if you win 26% of the time, like this sample, 26% of the time, dude, you're going to be net ahead big time. And that's only 10% above break-even rate. Remember, the further out the risk-reward goes, the smaller percent increase you need above break-even. So this is a 10% above break-even, you're up 22R. But if it's a 50-50 chance and it's a 1R, and you're at, instead of 50% chance of winning break-even, it's a 60% chance of winning. That's the same equivalent as, above 16% here in this case. It's your positive 10% above break-even rate. Should be pretty much the same expectancy. That's not true. The further out in risk reward you go, like a 5R, and if you're up 10% on break-even, you're going to be killing it, dude. Way more than 1R. Up, it's at 60%. Way more. It's exponential. Big time exponential. I gotta make a chart of that for sure. But I mean, this was kind of just my sample. I wanted to show that you win more often, but really the takeaway here is that it doesn't matter what's already happened. You continue on going. It really doesn't matter what's already happened. Doesn't matter. Does not matter. So even when you think it's like, oh, we've got a string of 7 wins in a row, what are the odds it'll keep on going? Come on. It shouldn't keep on going. I mean, it's gone on such a big streak right now. Well, streaks is how you capture gamblers' fallacies. And I capture gamblers, committing to a gambler's fallacy act. They think it can't keep going. Okay? And this is a fundamental flaw of so many traders, I think, and it still affects me today. I want to go into just a small example here. Just if the market's going up, and let's just say it's a chance of going up 5 points, down 5 points, up 5 points, down 5 points. That's just the increments, okay? And it goes up 5 points, 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 and up 5 points again. And you're like, wait, that's really repetitive. That's what people see on the chart. This thing's gone up 5 points and continues to go up 5 points. I can't believe it. It's got to retrace. It's got to come back. It's got to come back, at least go down 5 points once. It can't just keep on doing this. Yes, it can. And the more that trend continues, the more it triggers shorts. The more people go into it like, that doesn't look right. I mean, the gambler fallacy people come into play, including myself. When I lost so much damn money, bro, I go into it and just, it just continues rising. It's up 5 points, up 5 points, up 5. There's no freaking way that this is going to keep on going without a retracement. There is a way, my friend. There is a way, and there's an equal chance of happening. That's my point. Just the market's gone up, all this times in a row. That's history, man. Now we're here. Our price is here now. It's no longer down there. It's up here. This is where price is now. And there's an equal chance of it going up or down. Unless you have experimental probability on a setup that it's at a level that during these circumstances it does go down more than 50% of the time. But it's good to have our mindset as unbiased, as wow, this thing can continue up even though it's up this far in a row. And it does not look natural. It doesn't have to look natural. Okay? And it just keep in mind that it triggers gamblers' fallacies. Whenever things are in one straight line, it triggers people to go short the other way. That's by default. People think that. I think that. And I think there's a lot of people out there similar to me where it goes up too far too fast. They just think they got to short it. They think it's a better buy now. When it's not. It doesn't necessarily need a retracement. It can keep going in one straight line. And strings of probabilities happen. They do occur. Strings happen. And strings trigger gambler's fallacy. And gambler's fallacy is not what we want to trade. We don't want to trade that. Okay? So the takeaway is that don't trade gambler's fallacy. If it goes up in a straight line, it does not mean short that straight line, my friend. It does not mean it needs to come back to retracement. But it doesn't mean the other way either. Okay? Be unbiased, even though it looks unnatural, even though it creates a bias in your head. Try to fight that bias and look at objectively what's going on. Where's the buy? Where's the sell? Even though it's way up there and it's still buy, and there's a buy zone or whatever it happens, you buy it, dude. You buy it. Okay? Or you sell it. If it looks exactly like a short, a specific setup per your rules, but don't short it just because it's gone up 5 points 10 times in a row, and you don't think it can go on 11th. That ain't true. It can go on 11th. It can go freaking 15 more. Like what, dude? Strings happen. It's crazy. Strings happen, and the more the strings happen, the more and more it triggers these shorts. Because gambler's fallacy, and that what do shorts have stops of? Buy stops. and it keeps on going. It triggers things. So we don't want to mess with it. We need to think objectively throughout strings. Okay? All right. Peace.